Times have changed. There has been an outflow of $10 billion with a B from the largest decentralized finance protocol in all of crypto. Aave, a borrowing and lending platform, has seen an indirect hack. When we zoom out from that chart, this is the TVL, the total value locked on Aave. It peaked at $45 billion and now, less than 1 year later, it's at $16 billion. And it's all because one of the assets on the Aave protocol, the staked Ethereum provided by KelpDAO, got exploited through a bridge that's powered by layer 0. Now, I don't think that's just random. I think this has something to do with artificial intelligence. AI is getting stronger and stronger, and so everybody can create applications very quickly, but also hacking other people's applications becomes easier and easier. And so this becomes a fundamental problem with decentralized finance, because all the smart contracts, they are 100% public. AI scanners can just go through all of that code and then find potential vulnerabilities, and then potentially bad actors can exploit those vulnerabilities. And so this development is not necessarily a surprise. Have a look at this announcement for the premium members. Here in the premium announcement channel on April 11th, it could just be hype, but there's also a real chance it isn't. Anthropic is developing a new model, Mythos, that can identify IT vulnerabilities with remarkable efficiency. It hasn't been released publicly yet, but even the possibility is enough to take it seriously. As a precaution, I'm pulling my stablecoin deposits from Aave. The yield no longer feels worth the risk if more sophisticated exploits start emerging across DeFi in the near future. And this is pretty much exactly what happened. Now, this does not mean that we can't use DeFi at all anymore, but it does mean we have to increase our risk premium, our expected return. If our expected return for an investment in DeFi is 20, 30, 40%, and the risk isn't that high, it's okay. But if we only get stablecoin yields 4, 5%, then being exposed to a DeFi application now is not really worth it anymore. We have to increase our risk premium much higher. There needs to be more buffer. This is how that looks like on Aave. We've got the halted RS ETH market. Nothing can be supplied or withdrawn there anymore. And so the entire Aave platform is in quite a bit of a risk adjustment. Just have a look at the APY we now get on something like Tether. It used to be at 2 or 3%, not worth the risk. That's why we withdrew. But now it jumped all the way up to 13 or 14%. Now this hack did not remove $10 billion. It's not like $10 billion got maliciously pulled out of the platform. The damage was closer to 200 to 300 million, but still this does change the confidence in DeFi as a whole, not just in Aave. If you want to get more context, there's a good video over here by Chris Wurzwiewelt, Why Anthropic's New AI Model Terrifies Me. The price of the Aave token went down as well by roughly 20%. In the overarching picture though, the decline wasn't really that bad. Aave already started to get sold off since July of last year. That was even before we hit the all-time high in the TVL on the platform. This here is Aave relative to the rest of the altcoin market. So we're not looking at the US dollar price, but at its performance relative to others. Now, what about short-term speculation here? Are enough people now betting on falling prices that maybe there will be more outflows? Does it make sense to bet on falling prices or maybe even buy the Aave token? Let's have a look at the data. Over here, we've got the open interest on the Aave token. It didn't really change that much, as in there aren't that many more bets on the Aave price following those news. Here is the liquidation chart. Again, we haven't really seen any real impact from the news. Here is the funding rate. It continues to fluctuate at around 0. Aave is still the largest decentralized finance protocol. It's got a market cap of $1.4 billion. Let's have a look at what happens with the holders on chain. We've got almost 200,000 on the Ethereum platform. On the left side, we see the number of holders with at least 10 Aave tokens. So it's roughly $1,000 worth of the token. In the middle, it's $10,000. On the right, it's $100,000. We can see how the long-term pattern of acquisition has slowed down since the middle of last year. That's true for the small retail investor. It's true for the larger investor with at least 100K. Continuing with at least $1 million worth of Aave. There's 140 such wallets. Again, not that much accumulation anymore. And on the right, we've got exchange related wallets and maybe team wallets. That's with at least 10 million worth of Aave. This $10 billion outflow can be seen directly on the TVL chart on DeFi Llama for the total value locked across all chains, across all platforms. This did have an impact. I think that this hack, it's just the beginning. Artificial intelligence will find more vulnerabilities and people will exploit those vulnerabilities. DeFi platforms are becoming less safe. And so I simply handle it the same way as I did before. I diversify across platforms and I need to meet a minimum threshold, a minimum return threshold to justify the risk. Just because something is risky doesn't mean we should avoid it altogether. If we get compensated appropriately for the risk, it's still fine to take the risk. The only important thing is that in case the bad scenario plays out, that we don't get ruined, right? We don't want to have too much concentration risk, but we do want to make positive expected value bet. If you got some value out of this video, feel free to give it a like. It helps the channel grow. Feel free to also subscribe. I publish here regularly. There's also the premium membership. This is where I share my own trades. This is where also we got the announcement that it makes sense to withdraw from Aave. If you want to improve your crypto game long term, then premium is for you. Thanks for watching. See you next time. Cheers.